Hey, it's Anthony with Untitled, and I just wanted to bring you another update on the Boulder County market. So let's get right into it. Here in April for the data, we have a big change in what's going on as far as inventory coming on the market. Yes, you're feeling the competition. No, there's no inventory. But what we are seeing is a trend in the right direction, right? We're going to have a lot of pendings coming on. We're going to have a lot of under contracts and solds taking place because we're truly getting back to that seasonal market, right? We're really starting to see home sellers have the motivation to sell and want to sell. Now, there's a lot of things that kind of go into that with the market that we're in right now, but we did have 358 active units on the market, way down from the 800 last year. Keep in mind, the year-over-year numbers are completely useless right now. Right? We had the stay-at-home order last year in April. We had no showings and low under contracts and all kinds of jumbos falling apart. So things are really, really different this year in the market than they were last year. But we are getting back to a reasonable seasonality, and we're seeing a very strong seller's market and a very strong spring market. So here's kind of what the breakdown really looks like. If you look at the detached market, the detached market is starting to have an increase in active inventories because people are having some motivation to sell. The month-over-month data really suggests that the solds are spiking. They're going through the roof really fast, but everything that's coming on the market is getting sold. So that's very good news for you as a seller. If you're a buyer, at least you have the good news of there's a lot to look at right now. Yes, it's competitive. Yes, we have to go over asking price. But what we do see here is we really see the fact that there's some hope and we're getting more into a normalized spring market. The attached market had a little bit of a blip in the number of solds last month, but it's just because we're at that mercy of the number of actives coming on. So as more actives come on, we will see more increase in sales. We were down 13% month over month in solds, but good news, those under contracts are up 13%. So the main numbers are going to be right on track with our detached numbers, trending for a very normalized spring market. All of that opportunity that was around come the wintertime in the attached market that wasn't there in the detached market is gone. There is no inventory left, and everything coming on the market is moving at lightning speed. So keep that in mind. These year-to-date numbers can tell you a lot too, right? We're up almost 17% in solds for the attached market this year, 40% extra under contracts right now. Now that's a little bit skewed because you did have the stay-at-home order in April last year, but keep in mind the first quarter was very, very strong in 2020. Now we're in 2021 where we're really at the mercy of a lot of people moving to Colorado, lots of millennials really aging into being home buyers, and you're now having very little homes being built. So it's creating kind of the perfect storm for that appreciation number. When we go by city here, this is a big one for you. So the city of Boulder is really only down, let's look at this combined. So if we're at 119 active listings over the last 12 months, that's only 20% less than we had back in 2019. So these numbers do look really good. The real question is all that demand that was out in the county. Those are tough, right? You are starting to see stuff come on the market. Look at this. The active units in Erie are up 80%. So we have some appetite to sell homes, which is wonderful. Longmont, Erie, lots of stuff coming on the market, but it is moving as fast as it comes on. So if we look over to month supply of inventory, and I think this is a really good one to focus on if you're working with your clients, buyers or sellers, understanding where they're at in this cycle, right? This is the point where we really should be seeing inventory levels climb from here all the way to that, July timeframe or so. And the month supply of inventory is really just how many other people are on the market selling versus the buyer demand. And you can really see 1 month of inventory in the city of Boulder is such a strong seller's market, but these other markets are getting to the point where, they're not days in the ML or like in month supply. We're talking about at least over a week, which is good news for a lot of buyers because maybe they have a chance to go out and start competing where they couldn't have before. The last 12 months, you can just see how much lower the supply is, right? These numbers at 0.7 are far, far below where our balanced market is, around 4 to 6 months or so. And those numbers, 4 to 6 months, really put the buyer and seller on equal footing. So right now, the seller holds all the cards. That's why you're seeing all of the behavior you are. And you can really help explain that to your buyers and sellers with this type of a slide. It's obviously more extreme and detached. It has been for the last couple of years. It generally is. This is a more stable market than the attached market. But then you get into the attached market, and there's lots of crazy things happening right now. You had a huge boost in inventory in the city of Superior. Most of those are getting sold off about as fast as they put them on the market, but you had a lot of attached units come on the market in Superior over the last month. So good sign for Superior because they've been in a worst inventory shortage, a lot like Erie and Longmont for a while. So those will be gone, but at least we had something to look at, and you had, they're actually higher price point too, which you'll see here in just a minute. If we look at days on market, this is the time where we really usually see about a horseshoe in the market for the year in days on market. So this means, how long is a home on the market before it's sold, right? From active to sold. Right now we're at 52 days, which seems like it's pretty extreme, but keep in mind, the luxury market is outweighing the rest of the market so much, or so extreme, because there's just nothing for sale in those below $1 million price points right now. So with these numbers around 52, and they're still being just so low compared to where we've been the last couple of years, this really is trending in the right direction. We're going to see it start to ease up, hopefully around that July timeframe, June timeframe, and it would rise the rest of the year. The hard part is how much pent-up buyer demand do we really have, or are we going to be like last year where we just see a plateau all the way through the end of the year, which is very possible, right? And if it's moving faster this year than it was last year, that's going to be the same situation we're currently in, very difficult, as a purchaser. Interest rates, if they stay reasonably low, they're not going to change buying power by a lot. So that's going to keep these numbers very, very low. Now let's go over to our actives and sold by price range. This is one of my favorite slides. Anything by price range, I think, is one of the best things you can use for your buyers or your sellers in that price range, because it helps them understand, okay, the whole market's doing this. That's good to understand from, a 30,000 foot perspective. Well, what about me, right? And so when they talk about themselves and their market, let's just say they're selling a house that's, $550,000. Well, at $550,000, there were only 34 homes on the market in Boulder County. And where are we at here? Year to date, we're down 76% in active inventory. Well, that 76% is so extreme that it's creating a huge shortage, right? We're down 16% in total sales. And those sales numbers are not suffering because there's no demand, right? They're just suffering because there's not enough supply out there for people to purchase. So unfortunately, that market under 800,000 is really suffering from the total number of sales, just due to the fact that there's not enough inventory coming on the market. And then on the other side of the coin, you've got the luxury market at 1.5 million plus, where, they seem to be selling faster and we know what to do with them. They're over 100% up in all price ranges. The fact that we have 40 sales year to date at 3+ million, and we had 7 this time last year, COVID or not, that's a really, really big deal for the first quarter in April, right? So we're now kind of getting into that point where there's a lot of money coming in. There's a lot of demand coming into Boulder County. People will live all over the place. I mean, look at that. Another one, 2 to 2.5 million, 43 instead of 200, or instead of 20 for the last year. And you look at the active inventory, and the active inventory has been falling quite a bit too, because, let's go over to days on market and month supply, and it really helps reiterate this point where, we're down to nearly a balanced market for all of luxury, right? At 2 to 2.5 million, we're still in a seller's market. That's why you hear about people paying way over asking price. 6 months of inventory, though, in 3+ million is the lowest I've seen in a very long time. And the days on market suggests that there's a very large appetite for the higher end homes, and an incredible appetite, of course, like you guys know, for all of those under 800,000 or so. These are the numbers right here to keep your eye on, as far as, how competitive is the market going to be for your buyers or for your sellers in their, on their listings or their buy sides in those median ranges. And these are the ones where you're seeing those huge over asking price offers in many cases. Now, those ones that come on the market and they're just so amazing, those amazing properties are getting that all the way over 3 million, right? Over asking price offers are still taking place even at these 5 and 6 months of inventory, because there's been a lot sitting on the market for a long time, right? This is a very good example, that 2.5 to 3 million, 400 average days on market. There's a few outliers that have been sitting around for years that finally sold. So that's what's trending here in the price range. Keep in mind, this is 0 to 299 range. This is kind of an outlier as well, where there's just really not a lot there. There definitely isn't anything really move-in ready outside of the attached market. So those numbers are pretty skewed. Now let's go over to where you have a few things that are worth kind of sharing with clients right now, right? So if we look at the sold analysis by city really gives us a pretty good breakdown over the last 12 months or so, the city of Boulder has definitely been leading this. But keep in mind, the city of Boulder had a ton of inventory on the market coming into COVID, right? So over the course of the last year, we have really dissolved a lot of that inventory, and it's come out in the sales numbers. But you can see just this month over month change, right? 12% more sales. And you get into some of the other markets like Longmont that have been suffering from inventory shortages, and the solds are going to be down a little bit, right? Because that demand can't keep up, or the supply line can't actually keep up with demand. So something like Longmont at 12% down, don't think about that as a negative for that market. It just means that you're kind of at the mercy of whatever comes on. You go into some of these other markets like Superior, this is one of those outliers. Like I was telling you, all those attached units came on the higher end, and they all sold this last month. So that was kind of a 1 month thing that we're seeing. You're definitely going to see that kind of wash out over the course of the rest of the year. Let's go over to the following one that talks about average sales price. So there's a few big takeaways here, and I think we should probably look at this in detached and attached separately because there's some really extreme things happening. The fact that the city of Boulder is now up to 1.8 million average sales price, it's up 25% in 1 month, right? So what this tells us is just how extreme the market is, right? There's not enough of those lower price point homes for sale. Everything's pushing in the luxury side of things. Not that houses are appreciating 25%, but there's so many more luxury sales taking place than there have been in years past that's really continuing to drive that average way up. Louisville's down here. Louisville at 900,000 is actually lower than it was, but it's just because there isn't a lot coming on the market. So we're really at the liberty of those listings coming active. That's what's going to be in our numbers every month. That's kind of what's creating these averages that are all over the board. Another one that's pretty high that shocked me was just this Longmont number at nearly 700,000 for detached single family homes. That market is trending faster than anything else around it because it was the most affordable, right? So it's bound to appreciate a little bit faster than everything else in these periods of really, really high buyer demand. If you go over to the attached side, look at Superior at $776,000. Now that number is because of those 6 homes that sold that were those higher end luxury attached units, and they really bumped up those values. Now that's not always going to be above Boulder, of course, but it's definitely an interesting time in Superior where those luxury attached dwellings are really, really doing well. Now, of course, Boulder generally leads this charge at almost 600,000 for an attached unit, and it's just because of the proximity, right? And you're really starting to see all these numbers catch up to where they used to be, right? We're seeing a lot of month over month increases in the average sold price in the city of Boulder, and places like Louisville, take them with a grain of salt because there's just not a lot of attached dwellings. So when you're looking at attached units, you're really only looking at a few cities. You're looking at Longmont because they have a ton of attached dwellings. Boulder has a ton of attached units. Outside of that, Superior is probably the one with the largest percentage of attached dwellings versus the total number of sales in the marketplace, but it's a very small market, so it can bounce around a lot. When you're working with clients, you want to give them something to look at and give them that comparison of like 2020 COVID year, the shutdowns, all of that, and where we are today and how we're kind of coming out of all of this and how strong the real estate market is. This is easy, it's visual, it's quick to digest. Keep in mind the reason the April numbers were so bad last year was we were at stay at home. We weren't even allowed to do showings into the end of April, and here we are. So as we trend up, you're going to see more of a seasonal normal market, normal-ish, right, market, where that amount of sellers is really dictating the amount of sales that take place on the market. I have to imagine we will not compete with the July through December numbers of last year because they were compensating so heavily for those April and May shutdowns. Now, we know we have a really high set of demand. The real question is how many listings can come on the market and how far can we really take that into where we are here today. Now, look at that, 6% increase in year-to-date sales. So that's a really good sign. We're digging ourselves out of that hole that we had this time last year. So that's why we don't talk about the year-over-year numbers a ton, but everything is doing really well. Look at those sold numbers for Boulder. We're up 35% year-to-date than we were last year. And those numbers like Longmont, Erie, where I was telling you there's just no inventory and has not been, they're really suffering more than most. So those outlying markets like Louisville, Erie, Longmont, there's just not enough homes coming on the market, and the total number of solds is actually really far down because of that, right? Not because of a lack of demand, but purely because of a lack of supply. Let's go over into, this is the one where Everyone's asking all the questions, right? Save the best for last for you. If you stuck around to this point, the percentage sold price to list price is beyond record setting, right? Look at this, detached single family homes from 3 to 399, 109%, right? That's what you guys are all filling out in the marketplace. People are offering 50,000 over asking price at those kind of price points, and that's really driving those appreciation numbers through the roof. So when you're going to see 20+% appreciation on homes this year in Boulder County, that would be why, right? Because everything under $1.5 million is 104, 105, 106% of list to sale price. And what that really means is people are not necessarily overpaying. They're just, the appraisers can't really keep up. It's our job to give them the best data available for that to help them. So this might be a slide you start providing to your appraisers, right? They are appreciating so quickly. And you can really see, look at the month over month numbers here, right? You can see they're up 1 or 2% higher above asking price than they were even the month before. And we're getting more into that seasonal market, right? Even though it's a hockey stick looking market, you are going to see this start to taper off probably around that May or June timeframe where it reaches its peak. So we're almost to the peak, and hopefully this should give your buyers it's definitely some faith that things are going to get easier for them the rest of the year, or at least they have a lot to look at and they can go in and, you know, do their due diligence and start making offers and understanding that 106% over asking price at 500,000 isn't necessarily overpaying for a property. It's just trying to keep up with the pace of the market right now. We've never seen these numbers before. So it's really important that you give them data behind saying, we need to go in over asking price, because they need to understand how extremely high that number has to be, right? And if you look in attached market, the attached market is very similar. The luxury market's doing extremely well, but you get into those median price ranges under 600,000, or, you know, look at that, even under $1 million, they're over 100% asking price, but 104% asking price from 5 to 600,000. That really does show you that these attached units are now competing with the detached properties, and they're not solely separate markets like they were in 2020, where we were really talking about the differences. Everything is back on pace. People are looking at location, quality, all of those things, and they're willing to pay a lot for it. So the attached market is right back on track and doing incredibly well. And over the last 12 months, you know, it's up almost an entire percentage point from where we were in the attached market a year ago. So the tide's definitely rising. It's more competitive, and there's just too many buyers for our market. So if you have any other questions or you need any other sub-market data, of course, please reach out to me, and I will catch you on the next video. Thank you so much for tuning in today.